Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Fixed insurance is offered through various independent insurance companies. Cambridge does not offer tax or legal advice.
Welcome to the SA Update. I'm your host, Mike Schuster. Each episode, we dive into meaningful conversations and timely topics designed to empower our communities and clients. From financial insights to real-life confidence, we're here to help you stay informed, inspired, and ready for what's next. There's a lot of things when I look at spending. And so let's talk through spending and the different demographics and how they spend.
Yeah, absolutely. So again, I think like the most important one for people to have in their head is like the core demographic, like the Dent indicator, right? Like 30 to 54 years old, it's your biggest consumption and production years. That's when people are forming households, buying homes, buying appliances, buying cars, all those things that I mentioned. Younger people, they spend money, right? You go to college, you're going out and buying beer, you're, buying groceries, you have a car payment, maybe you pay for some insurance, but as a share of like total consumption, it's relatively small. And then what you see with like baby boomers, for example, is their productive years are over, right? Most of them aren't really working or producing anymore, but they've accumulated this huge chunk of savings, right? So we see a ton of spending from baby boomers. They're also another like core consumption demographic. Going on vacations, for example, buying second homes, you get the required minimum distribution. Maybe you're going out and buying that Porsche you always wanted or something. Right? So it's really about like on net, like it's like this balance between consumption and production, right? So like baby boomers are consuming more than they produce at this period of time because they previously produced more than they consumed. That core demographic is, the biggest production demographic. And then like younger people they're going to school, they're training up. They're not really producing or consuming that much at all.
So let's talk about the past for a second from a demographic standpoint. It used to be said that your biggest asset is your home. What do you see in demographics from home ownership? Is it important for millennials and Gen Zers to own homes?
Yeah, I think, listen, I think one of the reasons why we have this fertility rate problem in the United States is that housing's become relatively unaffordable for young people, right? And, eventually people can always afford to buy a house. And I sort of mentioned it when we were opening up, like millennials just have this delayed kind of onset adulthood, right? You can almost put it, where they went to school longer, it took them longer to buy a house or like get married or start a family. And so when you think about it, it's like maybe in a previous generation, you'd be married at 25 and own a home and you start having kids. Well, if now for like the millennials, that's 30 or 32, right? Just because of the realities of biology, that window for reproduction is smaller and you're going to have less kids, right? And honestly, if I was going to like put my thumb on a major thing that's driven that fertility rate lower, it's just, hey, competing in the labor market, getting the resources together, buying a home, making yourself comfortable enough to like go out and have kids and feel safe doing that. It just takes longer to do that now, right? And I think housing is a major element of that. And the housing discussion, I mean, we could go a ton of different ways with that, but the reality is here in the United States, housing, for me and you, right? It's like I'm going to buy a house to live in. But housing domestically in the United States is like an international asset. So everybody knows about like BlackRock or whoever buying up homes in different neighborhoods. And the reason they're doing that is because we have this giant trade deficit in the United States. These dollars go abroad. A lot of it buys treasury bonds, a lot of it buys the S&P 500, but hey, a lot of that's just coming back and going into the US housing market too, right? Famously, there's the billionaire row in New York, right in Manhattan. But part of it too is just, hey, it's nice to own a bunch of single family homes and rent it out to the wealthiest consumers in the world if you're the Saudi royal family or you're, a major international investor as well.
So let me ask a question. You're in Texas. Austin's a very popular area. You see a lot of people relocating there. What have you seen work in different geographical areas to help fix the housing problem? Because there's different areas that are doing really well and there's areas that are really struggling. So talk about that for a minute.
Yeah, so I'd say like Austin is famous because housing costs here famously like peaked and started to fall a couple of years ago, right? And really, I think the thing Austin did well is that we just basically approved a bunch of housing construction. Now, most of it's like multifamily buildings, right? We built a ton of apartments and everything else. But also, if you go 20 minutes, 30 minutes outside of downtown Austin, there's giant developments of single family homes as well. So there's a lot of supply of housing in places like Texas, in places like Florida, really like the southern region of the United States. And I think one of the reasons why these states sort of outperformed during COVID is that, there was obviously all the different pandemic restrictions. I think those were the straw that broke the camel's back and made people like make a change. But the South just has an abundance of housing that's relatively affordable compared to other regions of the country. So the number one way you can deal with it is you just got to build, right? Um, there's some other things that places like Texas or like even California has done this recently, which is to allow what we call like accessory dwelling units. So people are able to build like, basically a two-story small house in their backyard and rent it out to people,
Hmm.
for example. So
That
it adds to the housing stock, right, on the same amount of land. Whereas previously it's zoned single family, right? There's no other
okay.
options there. I think ultimately my guess would be because none of this stuff, frankly, has like really changed the picture around housing. I think a lot of it's about international capital flows, frankly. I think you're going to end up seeing some regulation probably around like major institutions purchasing single family homes in certain areas of the country. I think you're going to see regulation around Airbnb. I think you're going to see like an international purchase tax probably happen in the United States, at least in key cities, um, to
So
try
that's
and deal
more.
with some of the stuff.
So being in Nebraska, and we're across Nebraska, the state, and we work in numerous communities. I don't believe we see a lot of that. So you're saying that's more prevalent in the bigger cities?
Yeah, 100%. So, and really, when we think about it, right, like we talk about a housing problem in the United States, there's not really a lack of land. There's not really a lack of places to build homes. It's, we're seeing this giant trend towards urbanization for 100 years now, where we take everybody from the outlying areas and put them into the cities. And there's a lot of benefits to doing that, but real estate is, limited in big cities, right? It's the most desirable place to own a home or, to live. And so, yeah, I think that's where you see regulation, right? It's not going to be in the suburbs that you're going to see problems with, investing in real estate internationally or as like an institution. So, I mean, you're going to buy a single family home in like a core neighborhood in Austin, Texas. I could see that eventually getting some type of regulation put on it
Yeah.
because it's so desirable. And, if I'm thinking about it in terms of like my neighborhood, right? Like if half the houses here are ultimately just like Airbnbs that people rent out 3 times a year for like a music festival, all of a sudden there's less kids going to the public school, right? The public school is getting less funding, the public school shuts down, the whole kind of system falls apart, right? So you
Mhm.
actually need like young people buying homes and living in these communities. It can't just be rental units, essentially.
Yeah. And so maybe and which I agree with you on that. And I know Brian Westbury, your chief economist, would also agree less regulation when it comes to building could also help that,
Oh,
which I'm
no
sure you
question
agree.
about
Yeah.
it. And we've done research on that, and I think the National Association of Home Builders has done research on it as well. They put this out like every 5 years or so, but in the United States today, like 25% of the cost of a single family home today is just regulation, right? So, you $600,000 home, $150,000 is just inspectors and, setback limits and whatever else, right, that you're required to do. Now, there needs to be certain regulation, obviously, on building a house, right? I can't just um, build something crazy that ruins the neighbor's view or ruins the character of the neighborhood or whatever. I understand, like an apartment building in a single family neighborhood.
Yeah.
But certainly we could do better on regulation and how it inhibits like the ability to, to produce new housing supply, no question about it.
Yeah, most of my clients or even friends in the industry believe in the concept of let's find a common sense way to yes versus just say no initially and throw up barriers. And that's what I hear a lot. And you're saying that, confirming that today. Well, Bryce, I really appreciate the time today and appreciate you being a guest on our podcast. As I said, last time you came out here, you were very popular. Love to have you back on the podcast again. And thank you again for joining me today.
Well, absolutely. And I'd love to do it again anytime.
Thank you, Bryce.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Fixed insurance is offered through various independent insurance companies. Cambridge does not offer tax or legal advice.